Hello and welcome. You have tuned into Market Cafe right here on ET Now. I'm Shrishti Sharma, and the Union Finance Minister Nirmala Sitharaman has presented the much anticipated budget for the upcoming financial year. Now, at a time of global turbulence, Finance Minister has said that the budget aims to make India self-reliant and accelerate the growth, and impetus has been given to AI tech, semiconductor manufacturing and rare earth projects. Now, in terms of the macro numbers, Finance Minister has said that the government has pursued fiscal consolidation consistently without compromising the welfare spending. Firstly, let's go across and listen into the big announcement made by the Finance Minister in terms of the numbers, targets and tax reform. Let's listen into what Finance Minister has to say about the GDP ratio, fiscal deficit and more.
Government has been delivering on our fiscal commitments consistently without compromising on social needs. To strive towards accepted standards of fiscal management in Budget 25-26, I had indicated that the central government would target reaching a debt to GDP ratio of 50 plus or minus 1% by 2030-31. In line with this, the debt to GDP ratio is estimated to be 55.6% of GDP in BE 26-27. compared to 56.1% of GDP in RE 25-26. One of the main operational instruments for debt targeting is the fiscal deficit. I am happy to inform this August House that I fulfilled my commitment made in 2021-2022 to reduce fiscal deficit below 4.5% of GDP by 25-26. In RE 25-26, the fiscal deficit has been estimated at par with BE of 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP.
And along with that, Prime Minister Narendra Modi termed the Union Budget 2026-27 as highway of opportunities and said that the foundation of Viksit Bharat 2047 is there. Prime Minister Modi also said that the budget brings together high Capex and high growth. Let's go across and listen into what Prime Minister said.
ये बजट 2047 के विकसित भारत की हमारी ऊंची उड़ान का मजबूत आधार है। साथियों, आज भारत जिस रिफॉर्म एक्सप्रेस पर सवार है, इस बजट से उसे नई ऊर्जा, नई गति मिलेगी। ये बजट ट्रस्ट बेस्ड गवर्नेंस और ह्यूमन सेंट्रिक अर्थरचना के विजन को साकार करता है। एक ऐसा यूनिक बजट है जिसमें फिस्कल डेफिसिट कम करने, इन्फ्लेशन कंट्रोल करने पर फोकस है और इसके साथ ही बजट में हाई कैपेक्स और हाई ग्रोथ का भी समन्वय है। साथियों, ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है।
But with this, let me now take it across to Sajid for the editor's take on the budget.
The markets may be disappointed with the STT announced in the budget, but the policy measures which have been announced by the Finance Minister turns out to be a very prudent one, and this budget is a prudent one for quite a few reasons. The first one being, they have kept a 10% nominal GDP growth rate, which is pretty much in line with the street there. The street was looking for a Capex growth, which has come at 12.22 lakh crores versus the previous 11 lakh odd crores, which is there. In the defense space, there is an increase in budget for defense capital outlay at 2.19 lakh crores compared to 1.8 lakh crores. So in Capex, there are two things which have come in. One, Capex in general, and the second one being the defense Capex which is there. And the third one is in terms of railways, where the growth is roughly around 10% in terms of capital expenditure coming for the railways there. So from a capital expenditure point of view, the numbers are pretty much good in terms of the expenditure that the government is trying to do. But it has its negative effects as well. The government is moving to a debt framework where debt to GDP has been predicted or expected to be at around 50% plus or minus 1 by 2031. Now that basically means that because the government is looking at higher Capex over a period of time, they are pegging the entire debt to GDP at 55.6%, which is slightly higher than what the street was expecting. The street was expecting around 55.2% of debt to GDP, which is there. And that would mean some additional 2 lakh crores of borrowing which is going to come into the markets in the next financial year, thereby putting some pressure on bond yields and on some of the banks, which will be forced to buy those bonds from the market there. So from that point of view, it may be a collateral impact that may come in there, but fiscal deficit at 4.3% is as per expected lines as compared to 4.4%. There is the finance minister, which is also looking at over 3 lakh crores of money coming in as dividend from RBI and the banks in FY27. She has also tabled the 16th Finance Commission, whereby the entire the allocation to the states has been maintained at 41%, whereby there is some certainty of what the growth numbers are going to be. While the nominal growth is very conservative at this point in time of 10%, the numbers which are now coming in, like the numbers that came in for January of GST at 1.93 lakh crores, it shows that there is some buoyancy which is there in the market. There could be a chance that the buoyancy will lead to a higher tax collection going forward, because consumption is increasing after the GST 2.0 that happened in September of 2025 there. So overall, there has been some relaxations with respect to buybacks. There is some relaxation with respect to tax collected at source. There is also incentives for labor-intensive export sectors, which is there. And from a PSU point of view, there is a high-level committee which has been formed by the government to look at how PSUs can be scaled up. There is a scope which will be brought out by the finance ministry there, and then PSU real estate monetization is something which has come in. So overall, it seems to be a very prudent budget which has come in from there. The only disappointment for the street would be the STT high, but that's understandable because a lot of speculation is going on in the market, and a lot of capital of retail investors are going into losses that could be stemmed now, and that can then be diverted into cash market, or for that matter IPOs, or for that matter into consumption or bank deposits. So that's, from that point of view, it seems to be a very well thought out calibrated move on STT, and that's why I think the budget is prudent which has come out.
All right, so that was the editor's take on Budget 2026. But with this, viewers, it's time now to slip into a very short break. Don't go anywhere. We'll be right back with more on the other side.
At the World Economic Forum, Uttar Pradesh's push on deep
now, and Centre has announced new measures to curb futures and options trading frenzy. In the budget yesterday, Finance Minister Nirmala Sitharaman announced proposals to raise securities transaction tax on futures to 0.05% from 0.02% earlier, and by 50% on options transactions to 0.15% from just 0.5%. 0.01% earlier. Let's go across and listen in to what Finance Minister Nirmala Sitharaman had to say about STT.
The STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively.
We are touching only the futures and options. STT otherwise बाकी सब का ट्रांजैक्शन के ऊपर कोई नहीं किया, मगर जहां स्पेकुलेशन, हिंदी में सट्टा बोलते हैं, स्पेकुलेशन ज़्यादा और समटाइम्स हाईली रिस्की, क्योंकि हमें मैसेज आता है लोगों से कि इधर बहुत लॉस भी फेस कर रहे हैं लोग जिनके हाथ में इतना एक्स्ट्रा पैसा भी नहीं है जिससे वो स्पेकुलेट कर सकते हैं. सो दिस nominal increase is purely aimed at high speculation, only to deter them. मकसद बोल रहे हैं, हाँ, उनको थोड़ा डिस्करेज करने के लिए. हम इसके खिलाफ नहीं है, जरूर एक्टिविटी जो होता है उसका रेस्पेक्ट करते हैं, मगर इतने लॉस और इतने छोटे छोटे लोग का लॉस को सरकार देखकर कैसे आप चुप रह सकते हो? डिटर करो थोड़ा, उसको पीछे हटने के लिए, बस उतना ही.
All right, and Budget 2026 has delivered a major boost to India's railway infrastructure with the highest ever allocation for the railways, where Railway Minister Ashwini Vaishnav speaks on how this record funding will transform the sector and what lies ahead for the Indian railways. Let's listen into the conversation.
Simultaneously, we have also seen in this budget, there is a big boost to the electronics and IT sector.
Absolutely, sir.
4 major announcements have been made. Electronics component manufacturing, semiconductor 2.0, third is the safe harbor for IT services, and fourth is the announcement for AI data centers. We have seen electronics manufacturing has grown 6 times in the last decade. Exports have grown 8 times in the last decade. And today, electronics manufacturing is employing about 25 lakh young persons.
Okay.
And many of them come from very ordinary families, from very remote areas. And about 70% of them are young women who are working in these factories. So today, with 40,000 crore allocation for electronics component manufacturing, India will become a major supplier for electronics components to the entire world. Then second, semiconductor 2.0. We have seen the success of Semicon 1.0. We have seen how India has developed the trust of the world and created the first, created a totally new industry from zero. So that's why Semiconductor 2.0 is very important. In this, we'll be putting huge focus on the machines which are used for manufacturing chips. So we will design and manufacture the machines which are used to manufacture the chips. We will focus on materials, the materials which are used for manufacturing chips. So we'll manufacture the materials which are used for manufacturing chips.
That's the word coming in from Ashwini Vaishnav. But shifting focus then, Union Commerce Minister Piyush Goyal has hailed the budget and called it a budget for Viksit Bharat. Here's an excerpt of this network exclusive interview.
Well, markets have probably overreacted to the increase in securities transaction tax. This is a welcome measure. We have to cool down the superheated forward trading that was happening. Having said that, I do not think this will have a long-term impact. Markets will read more details of the budget and understand the holistic impact it will have on India's economy. As the market sees the positives, fiscal consolidation, fiscal prudence, the way the budget promotes manufacturing in India, the way the budget promotes the services sector in India, I'm very confident that this forward-looking budget towards a new India, towards an India which is preparing itself to become the third largest economy and continue to be the fastest growing large economy in the world, the market will positively factor in all these in the coming days.
And we were also joined by V. Velunam, Expenditure Secretary, and CEA V. Nageshwaran to decode the budget numbers.
I would think that the growth targets which we have given both in nominal terms and also in real terms, which we spelled out in the economic survey, have taken into consideration the current geopolitical situation. Okay. So when we said in the economic survey that real GDP growth will be between 6.8 and 7.2%, we had factored that in. Of course, in the economic survey, we also spoke about two other scenarios. One is business as in 2025, in which case our numbers would hold up very well. And there is a slightly worse scenario, and the third scenario which is even worse than that. If those scenarios materialize, yes, I would agree that the growth numbers will be impacted. But as if we assume that we only have a slightly worse variation or a more turbulence compared to 2025, but nothing systemically bad, then I think our growth numbers take into consideration the geopolitical circumstances and domestic strengths.
And in the post-budget presser, Revenue Secretary Arvind Srivastava also addressed the rationale behind the decision. Let's go across and listen in.
The only change made in STT is in the future and options. All the other STT rates remain the same. The primary objective of raising the tax rates on STT has been that it is felt that when you look at the volume of transactions in futures and options, whether you compare it to the size of GDP or size of the underlying securities market, it is largely in the realm of heavy speculation, which results in losses to small, retail, unsophisticated investors. And the government's intention is to discourage speculative tendencies. And the increase in rate is essentially in that direction. So it is meant to essentially handle the systemic risk in derivative markets. Even after this increase, however, the rates of STT will remain modest compared to the volume of the transactions that is happening there.
And following the much anticipated budget 2026, we spoke to CII President Rajiv Memani about its impact on India's manufacturing, MSMEs, data centers, semicon sector. Let's listen in to the full discussion.
I would say what I really liked about the budget was the emphasis on manufacturing, the emphasis that they have put on infrastructure, the allocation that they have made towards infrastructure, not only the overall capital allocation, but also the amount that they have spent on the transfers to the states, the focus that they have on MSMEs, I think that's also very good. What has been laid out for growth capital, for debt, I think that's very positive. So the emphasis on service sectors. And for me, the most interesting part is without spending too much of money in the next year's budget, the nudges that they provided for data centers, for semiconductors, for MROs, for nuclear, for rare earth, for GCCs. So I would say those nudges are very, very important. And they have not spent too much of money. And why I'm saying that's important, and I'll come to the misses also. Why I'm saying that's important is because we are in an era where last year our tax revenues fell short by 1,50,000 crores. So they had to curtail a lot of expenditure. So there is not a lot of fiscal space that is available to splurge and spend. So they have to tighten the spending. So in spite of they have spent. One area where I would have thought, and we'll have to see the fine print whether it's there or not, there's been a lot of ask for strengthening of the dispute resolutions. They have done some of it in the budget. In terms of, at the CIT appeal level, the amount that instead of 20% to deposit 10%. But that is one area why we would have had to, that's one area where I think I would think there could have been greater emphasis.
And the Union Budget 26-27 was yesterday, and we had an eminent list of experts from FICCI joining us on the highlights of the budget. My colleague Charu Singh caught up with a few of them. Let's go across and listen into an excerpt of that conversation.
Strongest area for us is our macroeconomics at this point, or macro stability at this point of time. Inflation is in control, balance sheets are delevered, we're in a very comfortable low risk zone. While the outside world is seeing fair amount of uncertainty, we expect or hope that this continues with the focus on reform, on manufacturing, on infrastructure investment. We would like that just continuity to happen going forward. Some areas that come to mind where the government can continue one is the market factor reforms. They've already corrected the labor codes. Now on power would be possibly the next area. We hope that we can bring down power cost, avoid cross subsidization as another area. And the second is land acquisition as another area of making life easier. And judicial challenges are also high. So to that extent, contract enforcement, releasing the bandwidth of fast decision making would be areas of next reform that we look forward to from business.
And along with that, yes, of course, you mentioned the STT. What about your thoughts on the hike on the STT in the F&O? What's the take here?
The truth is relative. From Finance Minister's point of view, this is like a sin tax. 9 out of 10 retail investors lose money on speculation. This has been proven time and again. And yet people want to speculate. Finance Minister is increasing tax. If you are a speculator, you are paying higher cost. Undoubtedly, no one is going to be happy paying higher taxes. On the other hand, there is also a set of market participants which believes that STT was levied in lieu of capital gains tax. Now STT keeps on increasing and so does capital gains. So it all depends upon from which side you are looking at this. From Finance Minister's side, STT is becoming like a sin tax to discourage speculation. From investor, it is breach of promise between STT and capital gains. And for speculators, they are agonized because not only they are losing money in market, but they also have to pay higher transaction cost.
That's the word coming in from Nilesh Shah of Kotak Securities. But let's go across and listen into what ET Now's consulting editor Swaminathan Iyer had to say on his overall assessment of the Union Budget 27.
No, I would rate this budget at, say, 5.5 out of 10. I will not give it a high score. The reason I will not give it a high score is that there are lots and lots of small tinkering little changes. But in terms of the big picture, I would have said that this is the midpoint of the electoral cycle, right? And normally you have a government does not act tough in the first year or two. And by the last year, again, it has to give freebies to try and win the elections. So this was a time for taking strong action in some things that may be unpopular. But this particular budget is unremarkable. It has not struck out in any great new ways. There are lots of things for every little sector. But I would have said that in terms of the political economy, the time was ripe for striking some things that are politically difficult. The one which stands out is this irrational urea fertilizer subsidy, because with all our subsidies, our price is less than half the world price. So urea is getting smuggled out to Bangladesh, smuggled to Nepal, being diverted for use as a basic chemical instead of being a fertilizer. So I would have thought that, this is an appropriate time to go for some of the tougher reforms, of which I think the fertilizer subsidy would have been the easiest one to tackle. And I'm somewhat disappointed that they've not done so. They have looked upon this as a budget largely of continuity. And there is a case for saying, if the economy has already been doing so well, repeatedly quarter after quarter, the outcome of GDP is surprising on the upside. So if things are going so well, why come with some major things which will spoil the image and functioning right now? So that would be one possible way, but that is not the approach that the finance minister has stressed out. The finance minister has said, I am doing more for this, more for this, more for this, more for this, and more for this. And as a result, there are a large number of small changes here and there. But if you look at the big picture, I would say it's an unremarkable budget. And I would have been happy, given the overall circumstances, circumstances if it had been a little more adventurous, especially in politically difficult areas, like, for instance, the fertilizer subsidy. There are others, of course.
And the government has raised the capital expenditure to 12.2 lakh crores in FY26 and 27 with effective cap now reaching at 17.14 lakh crores. Now with dedicated freight corridors connecting Dankuni East to Surat West, 20 new national waterways starting with NW5 at Nisa and 7 high-speed rail corridors were announced. What, as per your understanding, will be the catalyzing effect on ground, achieving the goal of a $5 trillion economy? That's the question that we have put up to Amitabh Kant. Let's go across and listen into his views.
No, infrastructure is the key to long-term growth. And I'm glad that the Finance Minister has increased the budgetary allocation of Capex, capital expenditure, to 12.2 lakh crore, which is roughly about 4.4% of the total GDP. Now, this will have a multiplier impact on Indian economy and, to my mind, drive both long-term growth and jobs. And if India is to become Viksit Bharat, it has to grow at 8 to 9% per annum. And for that, infrastructure is really the key. Our ability to do better infrastructure projects and our ability to do quality projects and our ability to do world-class projects is now the key. We need to think big, we need to think large, and we need to do world-class execution. Nothing should be shoddy, nothing should be third class. Everything should be to global standards. These are sectors which have been impacted by Trumpian tariffs, textiles, food processing, marine products, leather and footwear. And to my mind, the importance of these sectors lies in the fact that they must become globally competitive. We must be able to produce to world-class standards, we must be able to export. And the budget announcement helped towards making India a global manufacturing base on these products, and that these sectors should not continue to remain impacted because of the 50% tariff by US.
That's the word coming in from Amitabh Kant. But shifting focus then, my colleague Samir Dikshit caught up with the president of ASSOCHAM, Nirmal Kumar Minda, on how their requests have been considered by the budget this year. Let's go across and listen into a slice of that chat.
Capex infrastructure outflow of 12.20,000 crore. Of course, we requested for more, they'll mange more. So, but that is a first and foremost. And ease of doing business, they have considered many, areas in the customs, income tax. And we have given our request in 5 pillars from the ASSOCHAM. Make in India, how to promote Atmanirbhar Bharat, reduce our import, increase export. The second one was ease of doing business. Third one was MSME growth. And fourth was digitization and sustainability. So I think all our requests, I mean not say all, maybe 25, I was noting 25 of our requests have been accepted. And they have considered, not in full form, but yes. But I'm really thankful to the Honorable Finance Minister. And some of them, like ECMS scheme, from 22,000 crore to 40,000, this will also improve. This will improve our further localization of electronic parts. So you reduce imports. Then the mineral-rich states, the 5 mineral-rich states, we will explore and reduce our import again from one of the example is rare earth metal, which we are importing. And in ease of doing business, as I mentioned, the custom and income tax compliance, and then the demand in the SEZ, one of the SEZ to domestic, they'll be tax-free. So that also, originally we were thinking the SEZ should only export. Now if it is consumed in India, that is also tax-free. That's a good initiative. And the tier 2 and tier 3 cities, the 5,000 crore rupees of spending in the MSME, I think commendable. And one of the more is 10,000 crore outflow of MSME. This is also to promote MSME for Make in India.
The larger understanding that many experts they are suggesting that this government reflects that बहुत बड़े लोक लुभावन आश्वासन या वादे नहीं किए हैं. The focus has been on maintaining the continuity infrastructure spending and the connectivity, for example, highways की, railways के connectivity पर वो focus नजर आया है. Government इस वक्त no risk taking position पर आपको इस वक्त नजर आती हुई दिख रही है. इस तरीके का expert opinion है, आपकी क्या राय है?
देखिए, हमारे देश की इकोनॉमिक कंडीशन मैं मानता हूँ बहुत अच्छी है दूसरे देशों के मुकाबले, आपको मालूम है. और ग्राउंड रियलिटी का बजट है, नीचे को धरती को ध्यान में रख के किया गया है. हमारी 61.5% कंजम्पशन डोमेस्टिक है. और इन जो हमारी सेक्टर जीडीपी को ग्रोथ करते हैं 80% लगभग एक सबसे बड़ा हमारा सर्विस सेक्टर है, वो कंटिन्यू ग्रो करना चाहिए जो कि 51% है. सेकंड है हमारा एग्रीकल्चर और मैन्युफैक्चरिंग के ऊपर में ग्रोथ के लिए काफ़ी इनिशिएटिव लेना है. मैन्युफैक्चरिंग जो हमारा इस वक्त 13% है, अगर मैं पिछले वर्ष देखूं तो 7% ग्रोथ हुई. हमारा दिल मांगता है कि 25-30% ग्रोथ होनी चाहिए. हमारा इंपोर्ट उससे कम होगा, एक्सपोर्ट बढ़ेगा. तो अगर ये सब चीज़ें अगर हम सही रूप के अंदर में जो धरती से जुड़ा हुआ चीज़ें हैं, आम आदमी को देखा गया है, अगर आम आदमी की इनकम बढ़ती है तो जीडीपी ग्रोथ होती है, देश की प्रगति होती है.
All right, but for this, viewers, it's time now to slip into a very short break. Don't go anywhere, lots more lined up on the other side.
Presented by SBI, the banker to every Indian, truly. Co-presented by SBI Life, अपने लिए, अपनों के लिए. Co-powered by the all-new Kia Seltos, badass forever. Knowledge partner Deloitte.
माही भाई, कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर
From back on Friday with respect to the new Fed chair, and that really not just made an impact on the equity markets, but along with that we have seen even the commodity market reacting very sharply to the new announcements that have been made. But with respect to the reaction, as of now, we are getting to see that the US futures, the Dow Jones futures are actually down 76 odd points. The Nasdaq futures are also seen to be declining almost 0.6%. So that's the kind of a move that we are getting to see from the US markets right now. Is the US retail sales growth that has seen a slower growth in the month of December. That's what the markets reacted to. It's the highest treasury yields, and the dollar as of now was seen to be on the firm holding. But going ahead, all eyes will be on the policy announcements as well, because it's not just the kind of announcements that we are getting to see from the US markets, but it's the European Central Bank, Bank of England, Bank of Australia. These are some of the central banks' announcements that the markets will be keenly waiting for. But Shesha, what about the crude check? Very surprising moves over there as well.
Well, yes, crude has seen a decline of nearly 5% today morning. In fact, it is now trading near that $67, $68 per barrel mark. This after it briefly touched $70 per barrel mark just a few days back. So we have seen a big decline overnight, a decline of as much as 5%. And this is on account of easing geopolitical tensions. Remember, US President Donald Trump has said that they are in talks with Iran, and that is the reason geopolitical risk premium seems to be fading in the global oil market, and that is precisely the reason why oil has fallen nearly 5% in trade today, and it is now trading near that $67, $68 per barrel mark. But remember, there's another important update that has come in from the oil market. There was this all-important OPEC Plus meeting yesterday, and they've agreed to keep oil output unchanged for the month of March, even as crude prices continue to hover near that $68 per barrel. Remember, as I mentioned, at one point in time, oil prices shot up to 70 amid rising tensions between US and Iran, and Brent crude is now around that 67, 68, supported by geopolitical risk premium, which is now fading. Remember, supply disruptions also were weighing heavy on the oil prices. But the producer group OPEC Plus has now offered no guidance beyond March, and this is keeping markets guessing on the next move by OPEC Plus. Analysts say that OPEC Plus is deliberately preserving flexibility as uncertainty around Iran demand, global supply dynamics continues to remain under pressure. So that's as far as the oil market is concerned. We've seen quite a bit of decline in trade today.
That's about the oil market. It's a sharp decline over there, but Over the weekend, everybody was discussing about the move that we have seen in the precious metals, especially in the global markets, because specifically silver, the sell-off was really brutal one, because silver rebounded. For now, that's trading above that $85 per ounce mark. But remember, this is after plunging almost 30 to 35% back on Friday, its biggest crash on record, while along with that, it was the gold as well that slipped below that $4,830 per ounce mark, extending its steepest fall in over a decade, because at one point in time, yes, of course, gold was above that $5,300 per ounce mark. But along with that, what we have seen is that this sort of a sell-off is definitely having, after that relentless rally, momentum upwinds that we have seen in the month of January, and along with that, now that sort of a momentum that is seen to be unwinding. There's heavy selling by the Chinese speculators that is seen, that is definitely amplifying the slide. And yes, of course, very surprising moves that we have seen for silver as well as gold. Everybody has been waiting for some sort of a correction in the precious metals, but I don't think anybody thought that it will come with such an intensity, Ashisha.
Well, yes. Let's also take a look at what Asian markets are doing this morning, and it's largely a mixed picture that is coming in. Kospi, the Korean market, is down over 2% today morning, about 110 points chopped off in that counter. That's Korean market for you. Nikkei, Japanese market, is sitting with a positive bias, up 0.2% as we speak. We have Hang Seng Index, that one is down 1.7%, and ASX 200, that one is also sitting with a decline of 1%. So largely mixed, but on the negative side. That's how the Asian market wrap is for this morning. But shifting focus then, budget announcement yesterday failed to lift spirits on Dalal Street. Nifty fell nearly 500 points to end at about 24,800 levels. Sensex ended 1,500 points lower in trade yesterday. My colleague Harsh Saita is now joining us with a roundup of everything that happened in the market yesterday.
So, selling across the board, it was a very, very tough budget day for markets. A Sunday close of 2%, nearly 2% on the Nifty. And when you're looking at the low of the day, we hit a low of 24,711, and thereafter we rebounded. Now, the pressure was across the board, frankly. When you're looking at the stocks in the green, there were just 7 stocks in the green versus 43 Nifty 50 stocks in the red. So the breadth was extremely weak. We saw some of the defensive names, Max Healthcare, the likes of a few IT names, which were sitting in the green but not convincingly in the green. Outside of that, you had a whole host of stocks which were sitting sharply in the red. BEL was down 6%, Hindalco, ONGC, SBI, Adani Ports, all faced cuts of 5% plus. And in fact, we had more than 10 stocks which were down 4% plus in trade on the Nifty 50 index itself. So the pressure was broad-based, the pressure was strong outside of IT. IT was probably the only basket which remained protected at close, 0.5% higher on the Nifty IT index. Some of the budget proposals favoring buybacks, which has aided that index. Now let's talk about some of the key losers in terms of sectors. The Nifty India PSU Bank, the Nifty India Defence Index, and auto banks, all of them were down over 2%, but PSU banks were down 6%, and the Nifty India Defence Index was down 5%. Now, the selling was extremely sharp. The Nifty India Defence Index has seen a rally this week. Thereafter, now, what we're seeing is pressure mounting. When you're looking at broader markets as well, 2% low on the Nifty mid cap, 2% low on the Nifty small caps as well. So largely in line with how the Nifty 50 performed. The large cap as well as the mid small performing largely in line. Now, when I'm talking about some stocks which were hurt due to the spike in, or rather the fall in gold and silver prices, you'll see an MCX down 12%, a Hindustan Zinc down 10%, a Muthoot Finance down 9%. So on the casualties were very, very large within the metals pack. So that was the other pack which was down nearly 5% in trade. So that was where all of the pressure really was. But outside of that, the breadth was extremely weak. 1,700 declines to just about 700 advances. And therefore, in general, a very, very difficult budget day today.
All right, but with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back on the other side.
वकील साहब, अच्छी खासी प्रैक्टिस है, नया फील्ड में क्यों जाना?
मंजू सिस्टर, देश का सोच रहे
और इसके फ्यूचर का नहीं सोच रहे?
SBI लाइफ से अपनी बेटी का फ्यूचर सिक्योर है।
तभी तो इनको अपने इरादे पूरे करने का राइट है।
करो पूरे अपने इरादे,
अपनों से किए।
माही भाई, कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है।
हाँ?
50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी।